I am AI avatar of CA Ratan Mondra. India today stands as one of the fastest growing major economies in the world, consistently attracting the attention of global investors, sovereign wealth funds, private equity firms, and family offices. The country's expanding middle class, rapid infrastructure development, and strong digital transformation have created a powerful long term growth story. Over the last decade, India has evolved from an emerging market opportunity into a strategic allocation destination for global capital. Investors are no longer asking whether India is investable. They are now focusing on how to efficiently access its growth potential. This shift has opened the door for more structured, regulated, and globally integrated investment platforms that can support cross border capital flows at scale. Historically, foreign investors entering India have relied on two primary structures. The first is the foreign portfolio investor route, which provides access to India's listed equity and debt markets. This route is widely used but primarily limited to public market instruments. The second is the SEBI regulated alternative investment fund structure, which is used for private equity, venture capital, and private credit investments within India. While both structures are well established and regulated, they are fundamentally domestic in nature. They are designed primarily for investment into India rather than as global investment platforms. As a result, international investors often face limitations in terms of flexibility, capital pooling, and global investment deployment. Although FPI and AIF structures serve important roles in India's capital markets ecosystem, they come with inherent structural limitations. These frameworks are largely India-centric, meaning they are designed to bring capital into India rather than enable global fund management from India. Investors often face restrictions on currency flexibility, investment geography, and fund structuring options. Additionally, operational processes are closely tied to domestic regulatory and tax systems, which can create complexity for international investors. In a globalized investment environment where capital moves seamlessly across borders, these limitations highlight the need for a more internationally aligned financial platform. To address these challenges, India has developed a world-class international financial ecosystem known as GIFT IFSC, located in Gujarat International Finance Tech City, commonly referred to as GIFT City. This financial center is regulated by the International Financial Services Centers Authority or IFSCA, which acts as a unified regulator for all international financial services operating within the jurisdiction. Unlike traditional domestic frameworks, GIFT IFSC is designed specifically to function as an international financial hub within India. Its vision is to position India as a global competitor to established financial centers such as Singapore, Dubai, and Hong Kong, while providing investors with a seamless cross-border investment environment. One of the most powerful advantages of GIFT IFSC is its ability to operate as a truly global investment platform. Fund structures established within GIFT City can raise capital from investors across multiple jurisdictions, including the United States, Europe, the Middle East, and Asia. These funds are not restricted to domestic capital sources and can operate in freely convertible foreign currencies such as US dollars. This enables fund managers to design investment strategies that are globally diversified, allowing capital to be deployed not only into Indian markets but also into international opportunities where permitted. This flexibility significantly enhances portfolio construction capabilities for global asset managers and institutional investors. A major structural advantage of GIFT IFSC is its unified regulatory framework. Unlike traditional financial systems where multiple regulators govern different aspects of financial activity, GIFT City operates under a single unified authority, IFSCA. This regulator oversees banking, capital markets, insurance, and fund management activities within the IFSC ecosystem. This integrated approach significantly reduces regulatory fragmentation and improves operational efficiency for financial institutions. For global investors and fund managers, this means fewer compliance bottlenecks, faster approvals, and greater regulatory clarity, which are essential for managing large-scale cross-border investment operations. GIFT IFSC enables a highly efficient mechanism for global capital pooling. Investors from different jurisdictions can participate in a single investment vehicle, eliminating the need for fragmented structures across multiple countries. For example, investors from the UAE, Singapore, Europe, and the United States can collectively invest through one fund established in GIFT City. This consolidated structure simplifies fund administration by enhancing governance and reporting efficiency. Once capital is pooled, fund managers can deploy it strategically into India, global markets, or hybrid investment strategies depending on the fund mandate. This level of structural efficiency is difficult to replicate in traditional domestic investment frameworks. Another important advantage of GIFT IFSC lies in its tax efficiency, particularly in relation to fund management services. In traditional domestic fund structures, management fees are subject to goods and services tax, which can create a significant cost burden for funds. In many cases, these funds are unable to fully utilize input tax credits due to the nature of their income streams, which are primarily capital gains and investment returns. This results in GST becoming a real cost to the fund. However, within the GIFT IFSC framework, fund management structures may benefit from GST efficiencies subject to regulatory conditions. Over the long term, this can result in meaningful cost savings and improved net returns for investors, especially in large institutional funds. GIFT IFSC is increasingly becoming a preferred destination for global family offices and ultra-high net worth individuals. These investors require sophisticated structures that allow for efficient wealth management across multiple jurisdictions. GIFT City provides a platform where family offices can centralize their investment governance while maintaining global flexibility. They can access Indian growth opportunities while simultaneously investing in international markets through a unified structure. This dual advantage of local access and global reach makes GIFT IFSC particularly attractive for long-term wealth preservation, succession planning, and institutional-grade investment management. The emergence of GIFT IFSC represents a structural transformation in how global capital interacts with India. While traditional routes such as FPIs and AIFs continue to play an important role, they are increasingly being complemented by a more advanced and globally integrated financial ecosystem. GIFT City offers a future-ready platform that combines regulatory certainty, operational efficiency, tax advantages, and global investment flexibility. It is designed not just as a gateway into India, but as a full-scale international financial center capable of competing with leading global hubs. For investors seeking scalability, efficiency, and international alignment, GIFT IFSC is rapidly becoming the preferred destination for cross-border investment into India and beyond. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations, and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.